I recently saw an article that caught my eye talking about hundreds of homes sitting vacant, investors losing hundreds of thousands of dollars of their money from investing in things that ultimately didn't receive the returns that they wanted. And I wanted to talk about that a little bit just because it's quite interesting. I thought it was quite relevant to the channel and it's relevant to a few things that I've discussed in the past. So I'll share my screen here. Let's go through this article. It's an Australian focused article, of course. It's talking about people in disability communities essentially not moving into new communities that are getting built. So this article essentially is saying that some of these estates in the Melbourne Western Fringe, the houses seem pretty good. Overall, they seem fine. They're perhaps a little bit boring, but overall, they're built for a specific purpose, and they're purpose built for people with profound disabilities, which is a really great thing. I think there's definitely a need for it, but that may not actually be the case, as it seems that the investments that people are putting into these properties didn't go so well. And it says here, we've got a man, Tony Wilson, and his wife. They were drawn to the special disability accommodation, looking for somewhere to invest. Now, I am not a big fan of going to specific institutions, private institutions, to try and invest money to get a return. I don't know that much about this SDA, but I think there's plenty of ways to go out and earn good returns on the market in an ethical way if you're looking for that. But in this scenario, it's backfired on them spectacularly. So we'll read on and we'll take a look. The Central Coast couple got in touch with a financial advisor, and the financial advisor has said that there's high demand and strong returns for these types of properties. So, of course, it seemed like a good investment, and it's ethical, which it was their personal interest, which is great. The idea of providing property to someone in need, ultimately, looking at this couple spent nearly $2 million building two properties. That's, $1 million per house, nearly $1 million per house, looking for returns of $150,000 a year, more than $150,000 a year. So let's say each of those properties is returning $75,000. That is so unheard of in Australia. I've never heard of any property going for $75,000, and I feel like there's something going on here, but I'm not going to read into that too much. At the end of the day, they're looking for 7 or 8% returns by the looks of it. So looking at this, they're looking at about 7 or 8% rental returns based on the price of the property. So that's quite high. So if we look at these valuations, if they're spending nearly $2 million, that's $1 million per property with returns of $150,000 per year. That's, 7.5%, $75,000 per property per year that they're expecting to get, which is a pretty sizable return. But despite all of these numbers seeming amazing, no one wanted to move in. And as it turns out, it's because the properties were in the middle of nowhere and they actually don't have access to any of the amenities that they need. And unfortunately, they've made some pretty tough decisions along the way that are now costing them. And they've borrowed against their family home in order to invest in the market. They spent some of their superannuation, and now they can't keep up with the mortgage repayments because they didn't get the income that the investment, the foolproof plan, promised them. So now they're skipping meals and medication. Horrible, terrible situation, and this isn't to dunk on people going through something difficult. Really, what I want to talk about here is the challenges that led them to get into the situation that they're in. It's genuinely terrible. This couple are, saying that it would have been a nice place to retire, but that's not going to happen. And, if you make a single bad decision, especially with finances, to the tune of multi-million dollars, of course, it will throw all of your plans out the window, and especially if you've spent the hard years of your life earning that money, all to throw it away on an investment that goes sour. The purpose here is to try and find ways to do that don't go sour, and find ways to preserve your wealth in ways that actually work. If reading through this article, I won't read the whole thing, but a lot of people here are saying land is cheap in these areas. Average investors want to invest in that area. But the problem, especially for these properties that this couple invested in, there were no amenities. They weren't close to shops. They weren't close to allied health services. So as a result, the people with disabilities can't move into them if they don't have access to what they need. So, of course, this investment is just going to be completely terrible. And they were dealing with massive oversupply. So the proof is in the pudding here. There's not really much more to say. There's too many properties. There's not enough people who want to live in them. And now people are having to, remortgage their homes, skip meals in order to get by because of the decisions that they've made. And it's really, really terrible. But what I wanted to talk about while dealing with this and talking through this situation is just to cover off some of my thoughts on really how this happened, how they ended up in the situation they did. And the key thing here is there were a few red flags that I see with those investment types, and even just the investment strategy of choosing to put money into them. I think when you're looking at an investment, you can't just go into it with the understanding that it's just going to return money forever. It's always going to be happy, wonderful. All of the figures that you get promised from some financial advisor are just going to work, because they're not. It's just ridiculous to even assume that. And I think that this couple have perhaps shot themselves in the foot, maybe over-relying on the advice of this financial advisor. But there's a few things that I want to talk about in terms of what I feel are good investments that perhaps may have been missed in whatever analysis is done here. So the first piece is time horizon. You have to know when you invest in something, what your time horizon is going to be. Are you planning to just buy it and hold it forever? Do you not plan on selling? Do you want to hold it for 10 years? Maybe in this case, they want to, have it for 10 or 15 years and then sell it. Or there could be any number of investment strategies that people go for. But if you don't know what your investment strategy is going into it, then you're bound to make terrible decisions in investing. The next one is diversification. So that's my second piece that this couple really struggled on, is diversification, because they spent $2 million. They got 2 properties. Sure, they got them in different geographic regions, one in Melbourne, one in Perth, but it doesn't really matter, because at the end of the day, they still bought 2 disability-focused houses in areas where there were too many disability houses and not enough amenities to support the people who lived there. So that basically meant that they were doomed from the start, that they've put all of their eggs into the disability supported living basket, and they've missed out on even a standard house or investing in the stock market or cryptocurrency or bonds. And considering they were later on in their working careers, or perhaps even beyond their working careers, I think they were late 50s, the challenge is that they don't have the time to make bad mistakes. So diversifying is essential at that point. You can't just risk it all on some 7% return in one aspect of the market, expecting it to work forever, because it just won't. That's just not the case. The third one I want to talk about is exit strategy. So like I mentioned earlier, when talking about time horizon, you have to know when to exit. You have to know what the deal is. And I think, like a lot of people in Australia, people just think, yeah, I'll buy a property, because property, I can rent it out and it will just print money forever. But like in this case, the values of the properties went down, so their expected rental yields are going to go down. And at the same time, now they can't sell profitably because the value's gone down. So they actually have no exit strategy, and they're essentially trapped paying mortgages for nothing because they don't even support the value of the property. So they can't refinance. They're forced to just pay the mortgage. And even if they sell, they're going to be left with hundreds of thousands of dollars of debt, which is just terrible. So that's essentially it. I wanted to do a quick video talking about this. If you like this format, please like, comment, subscribe. If you've watched any of my previous videos, definitely let me know how you feel about this format compared to the others. This is very much off the cuff, very blasé perhaps, but I wanted to try something different. If you liked it, please let me know, and otherwise subscribe. Thanks a lot.